The ultimate sign of a bubble is when speculative euphoria completely defeats the evidence, and that battle's playing out right now across multiple markets. Despite the near global financial crash of 2008, we see real estate back in bubble territory, while AI-related stocks are also looking worryingly expensive. But in our opinion, the most obvious and dangerous market is in cryptocurrency, and more specifically, the golden child of Bitcoin. So is Bitcoin the biggest bubble in history? Well, for those not already familiar, a bubble is defined as a period when financial assets get bid up to a price level which cannot possibly be justified in relation to its underlying value. It is typically associated with irrational exuberance and reckless speculation fueled by a fear of missing out. In the modern world, social media hype and cult-like devotions of followers can often try to push these assets to the moon. But in every historical example, bubbles have inevitably been followed by a burst. Economic distress and bankruptcy as the frenzy of speculative buying is replaced by a mass of panic selling. The Great Dutch Tulip Mania is often cited as the original bubble. In the 1630s, during Holland's Golden Age, the mania for rare species of tulip bulbs saw prices rise to eye-watering levels. Inevitably, this bubble burst, utterly ruining the late entrants to the game. Within a short time, the South Sea bubble in London and the Mississippi bubble in France followed suit. And in our own era, bubbles seem to be occurring at a worryingly frequent rate. The Japan real estate bubble in the 1980s still hasn't been recovered from, the millennium.com boom and global real estate bubbles in the early 2000s were disastrous, and in the very recent past we've witnessed the short-lived and crazy demand for meme stocks. But finally, there's crypto. So beyond the subjects of nodes, the blockchain, and fungible tokens, we look to the fundamental aspects of how to try to evaluate cryptocurrency, and Bitcoin in particular. While we are sympathetic to crypto peddlers' aim to insulate investors from governments and central banks' tendency to debase fiat currency, as things stand, we don't believe in Bitcoin to be a viable alternative. Why? Well, for one, it's an incredibly ineffective currency. It's highly volatile and has slow transaction times due to how the ledger settlement process functions, while also having high transaction costs. So by the time your payment is settled, it will be of a different value than what you originally agreed to, for better or worse, because it's not officially finished as a transaction until it's broadcast to the network and confirmed by being included in a block. Now, we don't need to get too bogged down in the technicalities of this. Suffice it to say, it's a slow, unstable, and expensive means of exchange, which isn't exactly what you want when you're trying to pay for anything. The most consistent serious play it sees as a currency is when it's being used as an untraceable asset for criminals. So yeah, not great. Yet despite all this so-called currency is flying because it's not being treated as a currency. It's being treated as an asset, something to be bought and sold for profit, and crucially denoted in the very currencies it's supposed to be replacing. Digital gold, as some now claim. So for an asset to be in a bubble, naturally it has to be overvalued. So for us to say Bitcoin is a bubble, we have to say why we believe it's overvalued. And so we get to the fundamental question posed by many classic investors such as Bill Gates and Warren Buffett, namely, what is the underlying value of a crypto coin? A fiat currency is the currency of a nation, given value by its ability to be exchanged for goods and services and backed up by a government with the power of taxation. It's been the central means of economic exchange that's allowed us to move past the barter system. On the other hand, as a currency you can't actually use as a currency, it's hard to figure out what Bitcoin's supposed to be worth. Michael Saylor, who we discussed in some detail in our videos about MicroStrategy, claims a valuation of $21 million per coin by 2046. Warren Buffett claims a valuation of $0 at any time period. As an amusing aside, reportedly we're in a world where analysts justify price in relation to the cost of mining the coins. The idea that ever higher computing and energy costs justify higher prices is idiotic, and somewhat indicative of the kind of thinking that people look back on after a bubble bursts and wonder, how did anyone ever believe that? Even a passing understanding of economics should really lead you away from a conclusion like this, but this is the nature of bubbles. People say strange things to support the hype. But back to Buffett, whose claim is that Bitcoin's value is entirely dependent on it being able to be traded, and that if he bought every last coin, it would be worthless overnight, which is not what one would say about any other seriously traded asset. If I own every drop of clean drinking water on the planet, the world is in for an extremely disturbing monopoly, especially for those found to not be subscribed to this channel. Meanwhile, if I own every Bitcoin, its value doesn't represent an oppressive monopoly as much as it represents monopoly money. It's also also worth noting that crypto has no income generation. It's an entirely non-productive asset. It pays no dividends and it generates no profits. Trading in it is a zero-sum game, entirely dependent on the greater fool's theory. The speculative idea that there's always someone out there prepared to pay a higher price for your Bitcoin in the future. This is the only way you can generate a profit. And once the supply of optimistic new buyers runs dry, demand collapses, price follows, the bubble bursts. And for those who don't believe that a digital token, highly traded, can just plummet, may I remind you of NFTs? And all of this is assuming, by the way, that the actors inside the crypto market are honest. You have to admire the persuasive skills of crypto promoters who have simply brushed over the Sam Bankman-Fried FTX scandal. And we're all asked to believe this is a one-off instance of bad actors. And in doing so, turn a blind eye to the myriad of pump and dump schemes that flood the crypto marketplace. Now, while that's not technically Bitcoin's fault, it is indicative of the mania surrounding cryptocurrency, this magical online money that's only going to go up and up. This is the kind of stuff that happens around bubbles. To better illustrate the story of the Bitcoin bubble, allow me to tell you two stories, one of which is the story of one of the P42 elders. In 2019, he was asked by a close relative if the relative should invest in Bitcoin, then priced at $11,000. Wearing his rational value hat, he cried, "No way." And when he met up again in early 2022, the price was now touching $64,000, and as you can imagine, the atmosphere was somewhat frosty. No matter, by the end of the year, the price had fallen to $17,000, and familiar bonds had been restored. Fast forward to late 2024, Bitcoin trades at $100,000, and he assumes no Christmas card is forthcoming. So is the moral of the story that we've got Bitcoin wrong? No. Remember that in the short term, the market is a voting machine, and bubbles thrive on being voted on and hyped up. Meanwhile, in the long term, the market is a weighing machine, and we believe the weight of cryptocurrency, a currency that doesn't function as a currency and an asset with no underlying value, is zero. What this family anecdote is about is teaching you not to short Bitcoin. Because as the old saying goes, the market can remain irrational longer than you, or I, or anybody, can stay solvent. But now for our second tale. In 1637, the well-known Dutch tulip dealer Rob van Swindler stepped out of his office in Amsterdam straight into a time portal. He was immediately transported to the same spot in winter 2025, outside the offices of Crypto Bubble Associates. He goes in, approaching the crypto dealer suggesting a trade. One of his rarest bulbs for a Bitcoin. "Are you crazy?" responds the dealer. "That tulip isn't worth anything." Between its inability to function as a currency and its lack of inherent value to back up its eye-watering price, we absolutely believe Bitcoin is one of the biggest bubbles in history. When compared to other bubbles, it's notable that the dot-com bubble still birthed Amazon. The houses are still shelters when prices crash. Really, NFTs and tulips are the things to compare crypto to, because when they crash, they can crash to nearly zero. It's a game of pass the economically ruinous parcel, and we highly recommend not being the one holding the crypto when the music stops playing. That's it for this one. Please like, comment, all the YouTube stuff, and we'll see you in the next one. Take care.